Welcome to the Stateless Standard, where we light the golden torch of liberty against the encroaching darkness of statism. In a world dominated by coercive monopolies and fiat illusions, we expose the machinations of the powerful elite who masquerade as guardians of prosperity. Today, we're dissecting the insidious web of global banking. So, buckle up for a stroll through the sinister halls of monetary manipulation, because nothing says freedom like a cartel of bankers printing money out of thin air to fund endless wars and economic servitude. It is no coincidence that the century of total war coincided with the century of central banking. Those words from Ron Paul cut straight to the bone, don't they? Central banks have a venerable tradition of colluding in the shadows, far from the prying eyes of the public they claim to serve. The most blatant example today? The Bank for International Settlements, or BIS, that fortress of financial secrecy nestled in Basel, Switzerland. Founded in 1930, largely at the behest of Bank of England Governor Montagu Norman and German Reichsbank President Hjalmar Schacht, its ostensible purpose was to manage German reparations after the First World War and foster cooperation among central banks. But let's not kid ourselves. As the self-proclaimed Bank of Central Banks, the BIS has always invited suspicion, and for good reason. Its wartime activities during World War II were anything but transparent, fueling endless conspiracy theories. And honestly, who can blame the skeptics? The history of central bank collaboration is a sordid tale of backroom deals and mutual bailouts. Think back to the so-called classical gold standard, which was really just a pseudo-gold sham. Commercial banks issued more money through loans than they could ever back with actual gold, and central banks did the same, playing a high-stakes game of monetary hot potato. Markets, being the pesky truth-tellers they are, occasionally doubted whether these institutions could redeem their promises. To keep the fraud afloat during bank runs, especially in the late 1920s and early 1930s under the gold exchange standard, central banks loaned each other gold or currency like old chums covering each other's bar tabs. It was all about preserving the illusion, propping up the system before the whole house of cards collapsed. Fast forward to our era of unbacked fiat money, and the urge for central bank cooperation hasn't waned, it's intensified. Why? Because the global fiat regime enforced by these monetary monopolists has spawned its own toxic dynamics. We live in a world of competing state-issued currencies, but it's a rigged competition at best. Sure, you can swap your euros for dollars easily enough, stashing them in a US bank as a time deposit. But try using foreign money for everyday transactions in your home country? The state clamps down hard, especially through tax laws, ensuring their fiat trash remains the only game in town. In this stifled arena, the drive toward a single world currency is inevitable, economically sensible even, in a truly free market. But under statism, it's a power grab, and guess who's winning the race? The almighty US dollar, the greenback Goliath. It's the currency of the world's largest economy and its most liquid financial markets. Thanks to decades of dollar-dominated international banking, trade finance, and cross-border deals, all bow to the dollar. Exporters and importers worldwide are hooked on it, giving the Federal Reserve outsized influence over global interest rates and liquidity. The dollar's hegemony runs deeper still. It's the premier international reserve currency. Euros, yen, renminbi, francs, pounds, they're all propped up on a foundation of dollars and dollar-denominated debt. Central banks everywhere hoard greenbacks like dragons guarding treasure, making the US the de facto emperor of global finance. But here's where the cynicism really kicks in. The banking sector itself is paving the way for a unified global monetary policy, all in service of an eventual single world currency. Banks, as we know, operate on fractional reserves, a polite term for legalized counterfeiting. They hold only a sliver of central bank money against the mountains of instant withdrawal promises to customers. One whiff of doubt, and the whole edifice teeters on insolvency. In our hyper-globalized financial circus, this vulnerability is amplified. Banks don't just borrow in their home currency, they dip into foreign pots too. Eurozone banks crave dollars for their deals, and vice versa. A glitch in one bank or currency zone ripples worldwide like a financial plague. These contagion effects force central banks to huddle together, coordinating like a well-oiled cartel, especially in crises. We saw this farce play out in stark relief during the 2007 financial meltdown. By December of that year, the Fed inked liquidity swap agreements in dollars with other central banks. Picture this: the Fed loans dollars to the European Central Bank, which then funnels them to desperate Euro banks starved of greenbacks in the credit markets. It's a global bailout machine, preventing chain reaction defaults. Let's break down how this sleight of hand works, creating money out of nothing, backed by more nothing. Suppose Euro banks are drowning in dollar-denominated debt from loans they've extended. Maturity hits, but oops, a crisis erupts and no one's lending fresh dollars. Insolvency looms. The ECB can print euros till the cows come home, but dollars? That's Fed territory. Enter the swap. The ECB draws on its Fed-granted line, selling freshly minted euros, say 100 billion, to the Fed at the current exchange rate, getting $100 billion in return, also conjured from thin air. The ECB promises to buy back those euros in 3 months at the same rate, no exchange risk. It then lends the dollars to its banks on whatever terms it fancies. Interest, collateral, you name it. But here's the kicker. The ECB, and by extension Euro taxpayers, are on the hook to the Fed for repayment. The ECB hands over the interest earned from the banks to the Fed, while the Fed parks the euros interest-free. It's a masterful illusion. Money creation squared, all to keep the Fiat Ponzi scheme humming. These swaps lay bare the cartelization of central banks, a global syndicate enforcing the fiat status quo. Nationally, central banks already cartel with commercial banks, blessing their fractional reserve magic while acting as lender of last resort to avert collapses. Globally, it's the same playbook. Fiat money fuels international crises through intertwined trade and credit. Economies are so codependent that one nation's default could domino the world. So central banks must help each other, or else. This isn't ad hoc, it's institutionalized. Under the guise of technical cooperation, central banks run training programs and knowledge-sharing platforms, aligning their staffs like obedient bureaucrats. It greases the wheels for deeper collusion, making cartel behavior feel as natural as breathing. Yet even this cozy club falls short of the ultimate prize, a global central bank wielding a single world currency. Voluntary cooperation among sovereign states is fragile. Liquidity swaps expose the Fed to credit risks, sticking U.S. taxpayers with potential losses if the ECB flakes. National mandates limit how far they can go. Public backlash could erupt over subsidizing foreign fat cats. In normal times, convincing voters to ditch their national funny money for a supranational one seems impossible. But crises? Crises are the statist's best friend. They expand political maneuvering room exponentially. Financial upheavals, in particular, fertilize the ground for world currency propaganda. As economist Fritz Machlup noted back in the 1930s, in times of foreign exchange shortages, business folk yearning for seamless trade often pine for a single world currency. For the democratic socialists, and let's be real, that's most of the establishment, the solution is obvious. Fuse all these fiat fiefdoms into one global monopoly currency, lorded over by an omnipotent world central bank. It promises maximum stability, code for total control, endless inflation for state coffers, and crisis containment within the beast they birthed. And surprise, surprise, proposals for such a fiat world money have been floating around for ages. We've only scratched the surface of this Tower of Basil, but the message is clear. The global banking cartel isn't just cooperating, it's conspiring to entrench a system that enriches the powerful at the expense of the productive. From pseudo-gold standards to dollar swaps, it's all an elaborate ruse to maintain monetary serfdom. If this expose has ignited your own torch of skepticism, subscribe to the Stateless Standard for more unfiltered truths from an anarcho-capitalist lens. Share this video to spread the light, because in the fight against statism, knowledge is our most potent weapon. Until next time, keep questioning the overlords. Liberty endures.